On October 13, Ehang, a Chinese air taxi startup, announced it had obtained a type certificate for its autonomous passenger-carrying aircraft, years ahead of its closest Western competitors. Less than a month after this announcement, short seller Hindenburg Research released a report claiming that Ehang had an empty order book, fabricated sales, misled investors, and that the Chinese startup was a fatal accident waiting to happen, both for investors and for passengers. What are the highlights of the Hindenburg report? How did Ehang and the specialized media react to it? Did Ehang's Q3 financial report, released on November the 22nd, reveal anything new? Is Ehang a leading visionary air taxi company? Or is it just an addition to the long list of suspicious Chinese companies quoted on the US exchanges? In this video, we will unpack all this and we will share the one action Ehang needs to take in order to restore the public's confidence. In the world of media, certain stories attract excessive attention, often due to aggressive PR campaigns, even when lacking substance or important content. On the flip side, there are narratives that do not receive the attention they deserve. One such overlooked story that caught our interest is Ehang versus Hindenburg Research. Ehang is a China-based eVTOL manufacturer. The company was founded in 2014 with the goal of commercializing passenger-carrying autonomous aerial vehicles. In late 2019, Ehang went public on the Nasdaq under the ticker symbol EH. Hindenburg Research is a US activist short seller. They focus on uncovering hard-to-find information from atypical sources, looking for accounting discrepancies, bad actors in management, undisclosed related party transactions, and illegal or unethical business or financial reporting practices. Now let me explain at a very high level what short selling is, because when reading some articles in aviation news outlets, it was clear to me that the reporters did not have a clue what short selling means. A short seller borrows shares of a company from a broker, then sells those shares in expectation of a price decline. If the price goes his way, meaning down, the short seller covers his short position by buying the shares back, then returns the shares to the broker and pockets the difference between the sales price and the purchase price. It is basically the inverse of going long. When you go long, you buy low, then sell high. When you go short, you sell high, then buy low. Now, short selling is a very risky way of making money in the stock market, because remember, you borrowed those shares. And without going into too much technicalities, if the stock price goes up too much, your broker may force you to cover your position and take your losses, even if you do not want to cover. And you are also vulnerable to a short squeeze. An example of a short squeeze is what happened with the GameStop stock in January 2021, when it went from around $17 to an intraday high of $483. And this was in less than a month. Many short sellers lost their account on GameStop. So to summarize, when you go long, you own the shares, your risk is to the downside. Worst case, the stock goes to zero, you lose it all. When you go short, you do not own the shares, your risk is to the upside. There is in theory no limit to the upside, so in theory your risk is unlimited. You may be forced to cover your short position and take your losses. So when you go short, you can lose it all and more. So long story short, no pun intended here, short selling is extremely risky. If you're selling short, you better know what you're doing. And this is what you would expect from a company like Hindenburg Research, who happens to have a track record. I'll give two examples and feel free to check their website for more. They exposed Nikola with their infamous truck testing hoax when they pulled their truck to the top of a hill in the Utah desert and let gravity take care of moving the truck downhill while they tilted the drone camera to simulate the horizontal road. A claim Nikola later admitted. Lordstown Motors was another company they said had fabricated sales, which happened to be true. Back to Ehang now. On October 13, Ehang announced that it had obtained a type certificate from the Civil Aviation Administration of China for their two-seat autonomous EH-216-S vehicle, that they were cleared to fly passengers, and this was a world's first paving the way toward commercial operations, that it was a benchmark for the airworthiness certification of innovative eVTOLs, etc., etc. Needless to say that this announcement was relayed by the specialized press and drew a lot of attention with some sensational headlines. On November 7, less than a month after this Ehang announcement, Hindenburg Research released an investigative report on Ehang and initiated a short position in the Chinese company. The report is not that long of a read, and I highly recommend that you take the time to read it and make your own opinion on this matter. The report claims many things. The ones we want to talk about are: claim number 1, hollow order book. The report says that 92+% of Ehang's claimed 1,300 plus unit pre-order book is based on dead or abandoned deals, failed partnerships, and newly formed customer entities with no discernible operations. One customer, United Therapeutics, weighs almost 75% of Ehang's pre-order book and was a pre-IPO investor at the time of placing the order. United Therapeutics quietly sold its entire stake in Ehang by February 2021. In November of the same year, the VP of Drone Delivery of United Therapeutics said, "I don't think anyone could say now that they have a certifiable configuration in terms of aircraft design," and he was talking about Ehang. The report also claims that a former Ehang employee said that the deal with United Therapeutics was dead. Claim number 2, sham sales contracts to pump the value pre-IPO. In 2021, a research firm alleged that one of Ehang's largest customers, Kunshan, was secretly a pre-IPO investor that signed sham sales contracts so that Ehang could report revenue growth as it approached its IPO. Corporate records revealed that Kunshan is in fact controlled by a Chinese financier whose VC firm invested in Ehang pre-IPO through an offshore shell company in 2017. An executive from the VC firm admitted in a 2018 interview to investing in Ehang. Further confirming this, the same executive was photographed celebrating with Ehang's CEO at the company's NASDAQ IPO bell ringing ceremony. Claim number 3, fabricated sales. From 2021 to 2022, Ehang reported $15.3 million in sales and wrote down $15.2 million of these sales as uncollectible bad receivables. At the end of 2022, Ehang's allowance for doubtful accounts sat at 85% of its accounts receivables balance. Alright, so uncollectible receivables indicate that the booked revenue is never actually converted to cash, hence the claim of fabricated sales. Claim number 4, no insider purchase. Ehang has not reported a single insider purchase since going public in 2019. The stock hit an all-time low of around $3.50 in late October 2022. No insider buying. The stock at the time of this recording is around $16. The report goes on to say that instead, insiders and key stakeholders dumped more than 28 million shares since the IPO, with the former CSO selling shares in September 2022 when the stock closed between $4 and $6 in what might have been a panic sale event. And the report to conclude that overall, Ehang seems to have a major credibility issue, whether it be by fluffing up its pre-order book or by misleading about early sales that bear all the hallmarks of fake revenue. Now, of course, the Ehang executives were not thrilled by the report. They pushed back on it, claiming that it contains untrue statements and misinterpretation of information regarding the Ehang business operations and financial conditions, that the report highlights the short sellers' cursory and incomplete understanding of the company's industry and business operations. Unsurprisingly, financial news outlets were the first to broadcast the short sellers report. Meanwhile, within the niche of aviation media, it was the Asian platforms that took the lead in providing the news. Western media took a little bit longer, and the response ranged from pure news reporting to denial and attacks against Hindenburg Research, trying to discredit the short seller. It felt like shooting the messenger instead of reading the message, with headlines like "Ehang suffers another shorting attack." We may not like short sellers. It's not glamorous to be a short seller. It's almost a bad word. Executives especially aren't fans of short sellers. They are not fans of activist investors neither. But just because they don't like what short sellers are saying, that it means that whatever they say is baseless. Remember, short sellers take a very high level of risk on their short positions. So, in my opinion, we should pay attention every time they report on a company and not discount what they say just because they're short sellers. I also think that the reporters need to disclose if they own shares in the companies they write about, and that the news media outlet needs to disclose as well if they get ad revenue from these very same companies. Ehang is one of the poster children of the eVTOL industry, and many specialized news media were in awe of what Ehang was saying. I don't think they did their due diligence on the Ehang order book or even read their financial filings. And now they're confronted with a report claiming that Ehang is potentially a fraud. It is difficult for these media to even consider they might be wrong. Can this short seller be wrong? Absolutely. But do you know someone who is right all the time? So my question to everyone is the following. What if they are right? What if Hindenburg research is spot on? That would mean that Ehang would have potentially lied on their order book or actually fabricated sales. The next logical question would be, what else are they lying about? So again, what if Hindenburg research allegations are legitimate? To bury one's head in the sand will not help anyone in the eVTOL industry. What tripped the specialized media, in my opinion, was the aggressive PR campaign Ehang did before the type certificate announcement and after the type certificate announcement. I mean, you gotta hand it to them. They asked NASDAQ to suspend trading for 4 days, pending an announcement of a very significant development for the company. Then they doubled down with an aggressive PR campaign after the announcement. I think the media quickly reported on the type certificate announcement without reading the content of the type certificate, and that was another mistake. Now, the Hindenburg folks said they spoke with an aviation expert who did just that, read the type certificate. And here there's nothing to hide, there's nothing to claim. With an online translator, you will read that the type certificate has many limitations that actually hinder the urban use case for Ehang, such as the necessity of flying within the line of sight of the remote crew and the requirement of flying over sparsely populated areas. In other words, not in an urban setting. The maximum operational altitude is also limited to 120 meters, a little bit less than 400 feet above ground level. Now, all these limitations are akin to those imposed on drones operating without a waiver, and that is exactly what the EH216-S was certified to, an unmanned aircraft system and not a transport category aircraft. It is basically a giant drone with a cabin on top of it that fits 2 passengers and that can fly only low altitudes in rural environments. And Ehang actually started talking about the low altitude economy in China in what sounds like a pivot from standard UAM operations. And on November 22, Ehang reported their Q3 financial results for the period ending September 30. Nothing wildly exciting to talk about there. It is a startup that is reporting a triple-digit year-over-year growth with negative earnings. The one chart that caught our attention was dedicated to the sales pipeline and only spoke about the Asian market. How about the rest of the world? How about United Therapeutics? Now, the key question is, how can Ehang restore confidence? One might argue that they did not lose it in the first place. This is typically a time will tell type of situation, but I think that a substantial level of insiders buying would go a long way. Why should the public trust Ehang if its own executives don't, especially when the stock price tanked in late 2022? They should have been scooping up shares left and right to show their commitment to the company. The Ehang executives can go on all the media outlets and beat on Hindenburg research as hard as they want. They can ask United Therapeutics to issue some PR stating there is an order, firm, conditional, pending, whatever, or they can ask the Chinese local governments to confirm orders to support the newly minted low-altitude economy. But in my opinion, the Ehang insiders need to take this one action, put their money where their mouth is and acquire shares in Ehang. To put things into perspective, the stock lost 40% of its value between the announcement of the type certificate and the day prior to the Hindenburg report release. So it's clear the market did not buy the type certificate story. So on the confidence side, regardless of any short seller report, the Ehang executives still have a lot of work to do. We will also be tracking if there is any significant change in institutional ownership in Ehang over the next few quarters. Institutional ownership is supposedly the smart money, and they are privy to information the general public doesn't have, especially Vanguard and State Street, since they have ownership in Ehang and in United Therapeutics. So we will see how they react to all this news. The last reporting on institutional ownership was done by end of September, so before the type certificate announcement. The next reporting will be the year-end one, so I'm really looking forward to it. What the smart money will do will be very interesting to follow, and we will be certainly talking about it on this channel. I doubt this story will end here, and we will be making more videos as it continues to unfold. So make sure to subscribe and ring the bell so you are notified when the next video comes out. Thank you for watching, and we will see you in the next video.